India's Antitrust Watchdog finds Zomato and Swiggy in violation of competition laws. India's Competition Commission has identified breaches of antitrust regulations by major food delivery platforms, Zomato and Swiggy, highlighting concerns about market competitiveness and anti-competitive practices. An investigation, launched after a 2022 complaint from the National Restaurant Association of India, found that both companies have favored certain restaurants through exclusive contracts, limiting fair competition. Key details of the CCI's findings: exclusive partnerships. Zomato entered into exclusivity agreements, offering reduced commission fees to restaurant partners that agreed to list exclusively on its platform. Swiggy similarly promised business growth to select restaurants in exchange for exclusivity. Market impact. The CCI's confidential report noted that these practices prevent a more competitive market, disadvantaging other restaurants and limiting their opportunities for growth on these platforms. Pricing parity requirements. Zomato and Swiggy both encouraged restaurants to maintain price parity across platforms. Zomato enforced specific pricing and discount restrictions and, in some cases, applied a penal provision if a restaurant didn't comply. Swiggy reportedly warned some restaurants that failure to adhere to these pricing standards would result in lower rankings on its app. Background of the investigation: the investigation came in response to industry concerns that Zomato and Swiggy's policies were unfairly restricting competition. The findings, which have been shared confidentially with the companies and the National Restaurant Association of India as of March 2024, reveal systemic practices that limit competition. Zomato has declined to comment, and Swiggy has not responded to requests for clarification. Potential consequences: the CCI's final decision is still pending, with options including imposing penalties or mandating changes in business practices to ensure a more competitive landscape. The case represents a substantial regulatory hurdle for Swiggy, which highlighted this case as an internal risk in its EPO prospectus. Swiggy, closing bids for its $1 billion EPO, is facing the potential for substantial monetary penalties if found in violation of India's Competition Act. Market reaction and broader industry implications: Zomato's stock fell 3% in response to the news. Both Zomato and Swiggy have grown rapidly over recent years, with Zomato's shares tripling since its 2021 listing. Swiggy, currently valued at $11.3 billion, plans to expand into smaller cities with a similar exclusivity program. Swiggy grow, despite discontinuing Swiggy exclusive in 2023. Meanwhile, Zomato is valued at approximately $27 billion, having expanded rapidly to meet the rising demand for food delivery services in India. Zomato and Swiggy have also ventured into quick commerce, offering grocery delivery services within minutes. However, these expansions are drawing scrutiny, with other players in the retail industry asking the CCI to investigate Zomato, Swiggy, and competitor Zepto for alleged predatory pricing in this sector as well. Looking ahead, the CCI's upcoming decision could reshape the operating environment for food delivery platforms in India. As the regulatory process unfolds, Zomato and Swiggy may appeal any adverse rulings, potentially prolonging the case. This investigation underscores the growing need for regulatory oversight in India's expanding digital economy and the importance of fair competition across sectors.